There was a Wall Street Journal article this morning talking about the role of individual traders on helping kind of drive up this recent run-up in cryptocurrencies. What do you make of that? Is that a bullish sign for the crypto market as a whole?
You have savings levels at all-time highs. You have companies issuing buybacks at all-time highs. Free cash flows are high.
I've been involved in Bitcoin since first 2012, 13. And I get the value proposition. I get what it is. It's perfection as an asset and its store of value. And this whole thing, the more time I spend on it, the whole crypto space, and the same is happening with technology at the same time, which is what the exponential age thesis is built on. Is like, we're about to go through the fastest period of technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. Humans are simple creatures. We think in linear terms. We can't understand exponentiality. It's just not something that suits our brains. But let me explain what's going on in crypto, because that's our focus for today a lot, is the internet between 1990 and 2000 grew at it. That's the fastest period of growth for the internet, because it went from zero, or from low numbers to larger numbers. That period, the internet grew at 63% a year. It was the fastest adoption of any technology in all recorded human history, much faster than the mobile phone that came before it and the telephone became before it. These are network businesses, and I'll come on to that in a bit because it's a really important concept. So, okay, how's crypto doing? Crypto's growing at 113% a year. It's the same number of users as the internet had in 97, just before you've decided to leave the world of finance and jump headfirst into it. People told you, oh my God, the dot-com crash, it was a disaster. Well, it wasn't, because out of that came Facebook, Amazon, Google. I mean, you name it. It was the start. It wasn't the end. So we're growing at 113% a year. So this is double the fastest adoption of any technology in all recorded history. Okay, that is exponential growth. So we're at about 140 million users as of today of crypto worldwide. If you lower the rate of growth to 83%, to be slightly conservative, you're at 1 billion people by 2024. That's 3 years. It's like, okay, I can't get my head around this, but that's how fast it's growing. And it gets you to about 3.5 billion by about 2027. So basically, you're going to get to half of the world by the end of this decade. So that is truly extraordinary. What is that? What is this adoption? The adoption is a network of money and all of finance. In fact, it's a network of value that sits above the internet, that connects all of this digital world into a way that the value is transferable, storable, ownable, recordable. And we'll get onto a lot of this stuff later, but this is the world of everything from Bitcoin, which was really clever. Why Bitcoin was a big breakthrough was because we've developed a new business model that mobile phones have brought and stuff like that. These are network models. It's in fact a guy called Metcalfe's law, which is you value a network according to the number of users and the kind of interconnectedness they have with each other. And that was mobile phone companies. If you had all of the mobile phone networks in the world added together, right, you got a multiple trillion-dollar business. We just don't think of it that way because it's fragmented. Then you had the network business models of Facebook, where they started, and Google and Twitter and Reddit and you name it. They started using behavioral economics combined with this data and creating a network of people that were incentivized to post more, share more, like more, do things more. Now, for us as users of those networks, we got the benefit of finding our old school friends and keeping in contact with your cousin and all the stuff that we use social networks for. The shareholders got rich. We didn't. In fact, they took the economics from us. They monetized our eyeballs and our attention. Then comes Bitcoin in 2008. So, and you've got something super powerful, because what you've got is a network where the users of the network have Bitcoin. The value of the network is Bitcoin. So it becomes a network like no other, with all behavioral incentives aligned, where everybody is incentivized to grow the network. This is why it grows so fast. And also think about it. I try and think of the world in different people's eyes. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. And then you look at real estate. So look at traditional investments. So what are investments? Investments are basically future consumption. You buy something now, you hope to sell it at a higher price to give you consumption in the future, right? When you retire or whenever it is, right? That's what an asset is to us in the investment world. So what assets do they have? They have the equity market, all-time record high valuations. They have the bond market, all-time record high valuations. They have the real estate market, all-time record high valuations. So traditional assets to them, they're buying very expensively. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you got crypto, the fastest adoption technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, it's a 500x. So 100x, you, me, nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. So, and it fractionalizes. So it doesn't matter whether you earn £20,000 a year or you earn £200,000 a year, you can both put 10% of your income in it because it's fractional. So now you're on the same playing field. Okay, that gets interesting. So we can all have the same percentage in Bitcoin, but then it's going to get more interesting because, like, if you've got an apartment in number 1 Hyde Park, that thing costs £200 million out of all of our reach. But the guy who owns it probably bought it for 100 million. He's made 100%. He's made 100 million. But we can't. And the average apartment in the outskirts of London hasn't gone up as much. So how do we make the money? Well, we're going to tokenize real estate too. Because then maybe out of one of those fancy buildings, one of those apartments gets tokenized. So you can put in 10% of your net worth into it, and I can put in 5% of my net worth, and somebody else can put in 50% of their net worth. And because it's fractional and it's tokenized, we all get to participate without it just being the rich get richer. Fascinating. So there's a lot coming. So it started, I've been involved in Bitcoin first 2012, 13, and I get the value proposition. I get what it is. It's perfection as an asset and its store of value. And yes, it's still too volatile to be a store of value, but it's compensated by the fact it goes up a lot. So, we don't mind. We have to accept the volatility. But then, I was starting to become aware of smart contracts in about 2015 as some friends of mine started talking about it. And I didn't really understand what that was, but when they explained, I started realizing the future of everything from insurance contracts to legal documents to anything could now go on a blockchain. And that meant for me also with my finance background, okay, that means all derivative contracts, which are complicated and messy. And we knew it when Lehman blew up, nobody knows who owns what. So I'm thinking, wow, okay, that's all of finance. Probably there's custody and there's clearing and these are a lot of things. And so I reinvested in the space. I sold out in 2017, too early. I then bought again in 2020 because the macro and crypto come to this point where it was like marriage made in heaven. The chart pattern was perfect. The government's going to print massive amounts of money. The financial system is going to be under massive strain, and Bitcoin is going to come this shining light. And that's exactly how it played out. So I was heavily invested, in fact, 100% of my liquid net worth in this, which is why irresponsibly long was the terminology. Although I didn't use leverage, so it wasn't that irresponsible. And I've got income and other stuff. But anyway, so looking at the chart, because I love a chart of Ethereum versus Bitcoin. And I'm thinking, this looks like it's basing. this looks like it's going to break out. And this is how I do a lot of my macro thinking. I start with a chart, think, why is it telling me that? So then I start doing work about, okay, well, we kind of think we know how to value Bitcoin because we're using this stock to flow model that Plan B has, and we're doing all this stuff. Maybe it's something else too. Maybe it's network effects. So I start talking to people, thinking it through, and I start looking at Bitcoin in network effect terms, and it works. Metcalfe's law. So I thought, I wonder if Ethereum works, because everyone tells me, oh, well, you don't want to, you don't want to touch Ethereum. It's a scam, it's a shitcoin, it's going to underperform. I'm like, once you tell me something like that, I'm going to look at it, if it's something serious. So I did the work, and it's like, not only is it getting faster adoption of Bitcoin, it's working perfectly in terms of price with Metcalfe's law, and it is almost mirroring Bitcoin back in 2017 with the kind of lag by the number of years, except the network's going faster. Then I looked at the quality of the network, like the amount of connections, and you see that people on Ethereum have built all of these applications, which is all of DeFi, all of NFTs, other uses of smart contracts. We've got central banks using it, for the European Investment Bank putting bonds onto it. We've got people wrapping Bitcoin on it, people are wrapping securities on it, and you're like, okay, this is the platform for now. Things can change.